Hi everyone, welcome for Tuesday Index and Audit series, which we started long back in the month of May. We had already completed more than 15 odd sessions, and we have seen a good response from uh, people in practice and also from industry. So what we have seen, whenever there is an Index related session, we see a lot of people from industry and also from practice. Whenever there are technical audit related sessions, we see a lot of people joining from practice. So with an intention, and as all of us are aware that from a NAFRA perspective and a lot of regulators in India and outside India, we see a lot of comments coming from them. Uh, with that, as I said, though charged with governance, this auditing standard is there from last 2 decades, but in detail, use of that auditing standards by our members is not seen very prominently. And hence today we have Ajit ji and Heena ji to present and discuss about that session. First, we'll just start the ICI motto song and then we will take the next steps. You can start the motto song.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
I think so. Thank you, Keshika ji, who would be introducing today's faculty members. I will just hand over to Keshika ji to introduce our today's faculty.
Thank you, sir. Yeah, thank you, sir. Very good morning, good evening to all of you. I, CA Keshika Bansal, as a coordinator, is going to introduce our most reputed in today's speaker. Today we have CA Ajit Viswanath, sir, and CA Heena Juthani, ma'am, who is going to share their thoughts on today's topic: what, when, and how to communicate to those charged with governance. Mr. C. Ajit Vishwanath, sir, is a chartered accountant with over 19 years of working experience with clients on auditing and engagement. He presently leading audits of entities in the financial services space and also work with his organization technical team responsible for formulating positions for new development consultations, etc. Ms. C.A. Hena Juthani, ma'am, is a chartered accountant over 13 years of working experience on audit engagement. She presently works with her organization technical team that is responsible for formulating positions for new development consultations, etc. She also has an experience of leading various training sessions on accounting and auditing matters. I now hereby ask faculty to join and share their thoughts on the topic.
Thank you, Keshika ji.
Thank
Uh,
you.
Hina, would you like to share
Yes,
the slides?
yes.
Yeah. While
Let me
Hina,
know if it is visible.
yeah, it's visible. It's visible. So while Hina kind of has put up the slides, I'll just spend 5 minutes introducing the topic. I think Chandan sir and Keshika ji both have kind of provided a brief context. But the one of the most important things as auditors, which we are required to kind of cover as part of auditing standard, SA 260 covers this, is our communication around those charged with governance. Over the next 1.5 hours, 1 hour 40 minutes, we will kind of cover some of the important aspects of the this standard in terms of communication with those charged with governance. Some of the important aspects which we propose to focus on is first, who is those charged with governance? Because that's an area where we see a lot of focus from regulators as well, and there is detailed guidance in the account auditing standards in terms of who's to be considered as those charged with governance. This is particularly important because if we as auditors do not get that assessment right, even if we have done everything else later properly, it would not be considered as appropriate if the identification itself is done properly. So therefore, to that extent, who is those charged with governance is one of the most important aspects of this standard, which we will focus on for all of you as well. We will then move on to what are the various requirements of communicating with those charged with governance, when they are required to be communicated, what is required to be communicated. So that, and there are two standards which cover this. One, of course, is SA 260, which has some requirements to be called out or communicated with those charged with governance. But there are references to communication with TCWG in other auditing standards also. We will cover that as well. Then we will move on to the concept of effective two-way communication. Remember, the auditing standards and regulators as well, both as part of our QRB reviews, NFRA reviews, PCOB globally, wherever we have regulators reviewing audit files, one of the important observations they have around communication with those charged with governance is not only that you have to communicate to those charged with governance as auditors. Quite often you may do that using slide decks, etc. But there has to be two-way communication. And when we say two-way communication, it is not sufficient that you have the two-way communication, but there must be documented evidence of the two-way communication. So we will focus a lot on what do we mean by two-way communication and what sort of audit evidence, audit documentation should be maintained as auditors to support two-way communication. Then we will move on to the recent observations from QRB reports. Many of these observations are also there in other regulatory inspection reports as well. We will kind of focus on these. And then we move on to expectation from audit committee. What do we have? What expectations we have from the audit committee or those charged with governance? And then finally, we move on to what resources we have and key takeaways, which we feel is important for all of you to consider. Before we begin with the content, just a few important points. We would request if you have any questions, if you have any comments, observations, we please do provide your inputs or raise those questions at those respective stages itself, rather than do it at the end as part of a consolidated Q&A. This is because many of the topics may be correlated. What we may cover in slide 1 may be important for you to understand slide 5. So therefore, to that extent, if you have any questions, any point of any observation, anything which you would like to add based on your own experience, please do so, because it will be important and will contribute to the quality of our conversation. Also, it will just help have an engaging two-way conversation. The concept of two-way communication not only applies to communication with TCWG, it also applies to this session. So we would be very happy if we are able to achieve a two-way conversation or two-way communication with all of you. And given that this is a remote session and we can't see you, it will only validate it will be a strong validation for ourselves if we get responses from you. We will also try, we have a couple of case studies where we hope to get your responses. You can also use the chat pod or raise your hand in case you would like to raise any questions. Okay, we will move on to the first slide then. Right. So, that historically or traditionally, at least in my experience, whenever we say TCWG in context of a listed entity, the first thing which comes to our mind is audit committee, right? But it will be useful for us to spend some time to understand what the auditing standard defines TCWG as. And this slide covers that. I'll just read out the definition. SA 260 defines TCWG as persons or organization with the responsibility of overseeing the strategic direction of the entity and obligations related to the accountability of the entity. This includes overseeing the financial reporting process. So the important point here is that when we say those charged with governance, these are not individuals or bodies whose only responsibility is overseeing the financial reporting process. Their responsibility is typically much wider. It is expected to be overseeing the strategic direction of the entity, not only on governance, right? And their responsibility includes overseeing the financial reporting process. If you see the standard, they have certain examples also of who could be considered as those charged with governance. In context of a non-corporate entity like a fund, etc., you could have a corporate trustee. Board of directors is called out as an example of TCWG. Management personnel, example, executive members of a governance board are also called out as examples of TCWG, or even an owner manager is called out as an example of TCWG, right? And when all of those charged with governance are involved in managing the entity, communication with persons with management responsibilities may not be considered adequate communication in their governance capacity, which essentially means that we need to cover everyone who is considered to be those charged with governance, right? And if, for example, the just to illustrate this point, the standard also calls out that directors, example one responsible for marketing, may not be or may be unaware of significant matters discussed with another director, example the one responsible for preparation of financial statements. And therefore the standard focuses on communication with everyone who's considered as those charged with governance. This is an extremely important slide, and you will see in the subsequent slides also later in this presentation as to these are also subject to observations by QRB and FRA on getting the identification of those charged with governance. If you read this definition on strategic direction of the entity, normally speaking, it would not you would not always find audit committees only meeting this definition, right? Even the standard calls out the example of board of directors. And therefore, one of the important things which we would like to call out for all of you when you're looking at listed entities which have audit committee or unlisted entities which have audit committee, it is not it should not be automatically presumed that the audit committee is those charged with governance. Even the auditing standard calls out board of directors as those charged with governance, and therefore to that extent one should have a detailed assessment on the audit file which evaluates the definition as per the auditing standard and sets out the assessment of those charged with governance, which also is typically replicated by management as well, so that there is enough documentation on file to support our assessment as auditors as to who is those charged with governance. Hina, would you like to add anything on this slide?
No, so Ajit, actually, something that comes to my mind is then are we saying, that an audit committee by default be considered or be not considered as those charged with governance?
Maybe we can allow everyone else to respond to
Yeah,
these questions. Could
yeah,
you use
sure.
the chat pod to provide your responses? Can the audit committee by default be considered as those charged with governance based on what we have discussed so far? Everyone?
So, Ajit, we are getting some responses
Can
where
see.
the
Krishna
answers
and
are
Nikita
yes,
have said
yes,
yes.
yeah.
Others? We have many more people on the as part of the session. We would request if everyone can provide responses, a majority can provide responses. It does not matter if your response is not accurate. Our objective is to just explain this concept better. Others, we have 4 or 5 responses so far. Okay. Hina, could you
Yes.
kind of tell us what the response is and explain this a bit more?
So, Ajit, uh, the answer actually is not yes, but it would really be that the evaluation of audit committee as those charged with governance has to be done in detail, and it cannot be called as those charged with governance by default. So let's see this from the next slide, which explains this a bit more in detail. Um, like you can see on this slide, the auditor will have to evaluate the audit committee whether it has all the responsibilities like that of a governing body. Does it have the capability to effectively communicate with the governing body? It has the authority to act or react of the matters that have been communicated by the auditor to them, whether it can provide any further information to the governing body. So, like Ajit, you mentioned in the first slide, the requirements of those charged with governance, if they are actually present in this subgroup, that's how the standard actually calls. If it is present with this subgroup, which is audit committee, only in those situations they would be called as those charged with governance, and not really called those charged with governance as default. And to bring to everybody's notice, actually, this was one of the observations that was brought out by NAFRA in their inspection reports, which were released in the recent past. And they have said that the functions which an audit committee has been allocated under Companies Act Section 177 4 are more from the financial reporting processes, and it includes monitoring of statutory audit. And they do not have all the functions of TCWG, which are envisaged in Standards on Auditing 260. Therefore, the audit committee is not called as synonymous with TCWG, but it is a subgroup. And hence, in order to effectively call them as TCWG, the auditor needs to evaluate, document it in detail, that how they are comfortable with an audit committee to be called as TCWG. Like Ajit mentioned in the first slide, documentation is utmost important. And then they could actually call this out to say that all the matters that were required to be discussed with TCWG have been appropriately discussed with the audit committee. So that was something that I wanted to highlight at this point. Ajit,
Yeah.
if you want to add
Yeah.
anything here.
Yeah, and this is a very important slide. Like the responses of all of you also indicate what I had just called out. That the basic presumption is generally that audit committee is the only organized or body within a corporate entity which is considered as TCWG. But both the standard and the one of the extracts of the inspection report published by NFRA also kind of call out that by default the audit committee in context of what the Companies Act sets out, etc., can may not be considered as audit committee. It requires some evaluation. It requires the auditor to document how these criteria is met, and only then can one safely conclude that what is TCWG or who is TCWG. Kashyap has his hand raised. Kashyap, if someone could unmute Kashyap to allow him to speak, then that would be really nice. Would it be possible to
Keshika ji, would it be possible?
or alternatively we'll request Kashyap to
Yeah,
type
please
out.
write it on the chat box. Yes.
Yeah. Kashyap also no longer has his hand raised.
Maybe by mistake or something.
Yeah. If Kashyap, you do have a question, if you can type in on the chat, then we know that we can unmute you. given that your hand is no longer raised, right? And therefore, I would again, for the sake of repetition, but this is the most important part of this discussion which we are having. Quite often, the what is required to be communicated is available in the auditing standards, and those are quite self-explanatory. We will cover it in the subsequent slides as well. But this is an area where we cannot, as auditors, afford to get it wrong. And therefore, we would like to re-emphasize this on who is to be considered as those charged with governance. And if you do have any questions around this area, we would be happy to deal with now, or we can deal with any questions which comes up later as well, because this is possibly the one of the most important elements of the auditing standard which we're covering today. Moving on to the next slide.
Yes, Ajit.
Yeah. So, Hina, within the matters to be communicated to TCWG, of course, there are 3 or 4 sections on this matter. Could you kind of cover what what are the auditor's responsibilities in relation to broadly a financial statement audit, and then we will get into more details. But could you kind of share in your experience what are the key responsibilities in relation to an FS audit for an auditor on communicating with TCWG?
Sure. So, Ajit, actually, the auditor's responsibility are often included in the engagement letter or any other suitable form, but
Right.
most likely it would be an engagement letter. When I say any other suitable form, there are certain public sector, engagements where certain matters are required to be brought into attention, depending on the other work, something like performance audits that have been performed. But in
Right.
normal parlance, it would be an engagement letter.
Right.
Now, the matters that would really be required would be that the auditor is responsible for forming and expressing an opinion on the financial statements, which are actually prepared by the management with the oversight of those charged with governance. It is then required that the audit of the financial statement does not relieve the management or those charged with governance of their responsibilities. So that's why this is one of the important matters that gets highlighted in these kind of agreements that or terms agreements that have been agreed.
Right. We can't hear you, Hina.
Audible now?
Now we can hear
Yeah.
you.
The other important part that I wanted to highlight is the fact that the essays do not require the auditor to design the procedures for the purpose of identifying supplementary matters to communicate with TCWG. So, these are actually certain aspects uh, that the auditor would really cover when it comes in relation to financial statements. The other point that I wanted to highlight, Ajit, was on the next slide, which is with respect to plan scope and timing of audit. Now, this is one of the very important matters that are required to be communicated, and this covers a lot of other matters within planned scope at a planning stage. And why I'm emphasizing the word planning is that sometimes we do not really communicate every matter at the right time, and this has been one of the observations, and we would be covering that in the later slides. But planning has certain matters that are mandatorily required to be covered. Like you can see on the slide, the first point with respect to significant risks identified and plan to address the significant risk. So, Ajit, this one I wanted to explain with an example. Uh, let's say the engagement team has identified IND AS impairment of assets under IND AS 36 as a significant matter. So what is expected is that the engagement team communicates this, that impairment of asset, which is a significant risk, to the those charged with governance. Now, typically, what would they cover is what are the risks in this particular area that they are talking about. So let's say something like indicators that a cash generating unit could be impaired are not appropriately identified. That could be one of the risks. The other one could be an inappropriate amount is estimated with respect to these cash generating units when the measurement is of recoverable amount is considered. So they would consider significant risks as one of the matter. Now, do we stop at significant risk? No. The answer is that you further also let the TCWG know that what are the audit procedures that you are planning to address this significant risk. So let's take the same example forward of the impairment of assets. And the planned audit procedures could be something like inspecting management's assessment and consideration whether further indicators that would have been identified by the auditor, it bases his work that he has performed, current market conditions, the operations or the operating environment, evaluating the valuation techniques, the assumptions, and the data that is used by the management. Other important aspect that the auditor needs to think about while he is looking at the response to this significant risk, his planned approach, is that whether he would like to involve any specialist to challenge this assumptions of the management. And if he would like to involve any specialist, then he actually calls that out in his communication to the those charged with governance at the preliminary or at the planning phase. Also, very important aspect, which will later be connected to our other slides, is whether this significant risk could also lead to a communication as a key audit matter or be a part of audit or be under a part of auditor's report under section under standard in 701. So, Ajit, significant risk, as I mentioned, is one of the foremost and the most important aspect that needs to be covered as a part of planning stage.
Ina, the timing of this communication is supposed to be when? At which stage of the audit do we, as auditors, need to communicate this to TCWG?
As I mentioned, Ajit, it would be planning phase. So
Right.
let's say what would typically happen once the audit team starts their risk assessment, evaluates what could be the risk basis, their discussions, inquiries that they would have done with managements and with others internally in the organization, is the time when they actually come up with certain list of matters that they think they would discuss with the those charged with governance. And it is important, Ajit, that this is like a corroborative fact which they have actually come to know from the management also. When they discuss with those charged with governance, this could be confirmed in a way. So hence planning phase, discussing this matters or highlighting this matters is very important.
In fact, Ina, correct me if I'm wrong, all
Yeah.
these items which are listed on this slide
Yes,
typically are covered in a document which is referred to as audit plan, right? And which
absolutely.
the auditors are required to communicate in advance, right at the outset of the audit after risk assessment to
Absolutely.
TCWG from a perspective of getting their inputs and concurrence on this. It's not only about communication. We did speak about two-way communication, which we'll cover later, but the element of two-way communication applies to each item which is required to be communicated with TCWG, including, for example, getting concurrence from TCWG on what the significant risks are, what are the processes to be followed, and each of these items subsequently, which we'll cover. So that's also an important element for all of us to consider. And just to reiterate, what Hina did call out was not only do we need to describe what the risk is, whether it's a risk of error or risk of fraud, etc., but we also, as auditors, need to spell out what will be our response and how will we address the significant risk, which essentially means um, what procedures will we perform? Do we involve specialists or not? Is there an involvement of external expert by management? How will we kind of address some of those items which are there? Uh, is this going to be a key audit matter or not? Also, all of this is required to be captured as part of the communication. There may be more items which may be relevant to each fact pattern which each auditor needs to consider, but these are just illustrations of what needs to be covered when we are talking of significant risk.
Absolutely perfect.
Yeah. The next item which I'll cover, Hina, before handing it back to you,
Sure, sure.
is auditor's approach to internal controls, and I will split this into two parts. One, where internal IFC reporting applies in context of corporate entities, and two, entities where IFC reporting does not apply either in case of corporate entities because they are not of a particular size which is prescribed in the Act, or they are non-corporate entities where IFC reporting does not apply. In both cases, there has to be an element of communication around approach to internal controls. Only difference is where IFC does not apply. We have to explain what is our approach to internal controls, how we are kind of covering each of those controls before we get into the exact procedures approach. Whereas in case of corporate entities where IFC reporting applies, it's a given that auditor has to cover it. So therefore, to that extent, we directly jump on to approach. And again, similar to the first example, when we say approach to internal controls, we have to explain what are the various types of procedures we would perform. Are we covering all areas? If there are automated controls, how are we proposing to cover? Do we have IT specialists who will cover it or not? So there may be various elements to internal controls which we will need to kind of spell out as auditors to explain to those charged with governance as to what is our approach to internal controls. Would you like to add anything to this, Hina?
No, Ajit, I think you've
Yes.
covered it.
What do you mean, Hina, by the concept of materiality? What are the various elements of communication which we need to cover for
Yeah,
concept of materiality?
I think this is one of the most important item that is required to be evaluated or brought out by the engagement team at the very start of their audit. They While the auditor would actually compute the materiality or determine the materiality, it is also important for them to call this out to those charged with governance to say that how this materiality has been computed. Let's say, for example, what is the kind of benchmark that they have used. Let's say profit before taxes is something that they have considered. The other thing that they need to call out is that whether this is determined at the financial statement as a whole, and whether this would be a reasonable amount that would be considered for evaluation of misstatement, and it would have an impact or influence on the economic decisions of the users of the financial statement. Other thing that is expected is the auditor should ideally call out whether they would be reassessing or reassessing this materiality throughout the audit period, and how they would be actually using this materiality in performing the audit procedures and evaluating the misstatements. So these are certain important aspects, even though let's say they have not really called out what that amount is, but primarily calling out how it is going to affect the entire audit procedure is a very important communication to those charged with governance, which is mandatorily required by the standard.
And in addition to what Hina has called out, one important thing which may not be so obvious again for us as auditors when we are speaking with colleagues or sorry, TCWG, is that when we are auditing consolidated financial statements, right? In addition to the materiality which we are communicating for separate financial statements, we also as auditors need to communicate the materiality used for consolidated financial statements as well, including the allocation or component materiality which is identified for the entity in question. And equally, for example, when we are statutory auditors of a component and we've received a component materiality either from ourselves as parent auditor or from another firm. Typically, one would consider lower of the two because practically you would not do two separate audits. Again, that communication clearly has to be made to those charged with governance as to what was the basis of materiality. Was it the component materiality which was determined at a parent level for a audit of consolidated financial statements, or was it just the separate financial state materiality determined at a separate financial statements level? So the point being that both this question on communication with TCWG and audit plan communication, all of these apply equally to separate financial statements and consolidated financial statements. So, for example, on significant risk as well, you may have you may not have goodwill in the separate financial statements, but in the consolidated financial statements, one may have goodwill. The client's statements may have goodwill, and you may have a significant risk only which is applicable to consolidated financial statements, which also needs to be covered as part of communication to those charged with governance. So just to highlight that this is not only an item, communication requirement is not only for separate financial statements, it applies to all the audits which we cover as part of the statutory audit for the respective entities.
Absolutely right. In
Yeah.
fact, Ajit, with this, I thought, it would be important to cover one more aspect, which is one of the pointers here. Like, how do you plan to involve the other auditors in the audit work? When I say other auditors, I mean to take everybody to SA 600, wherein
Right.
I would kind of involve my component auditors. So the two-way communication over here is effectively trying to say how do you communicate to your components so that they have an audit approach which is in line with the audit approach that you would be doing as a group auditor or a group engagement team. And what is the nature, timing, and extent of our direction to them, our supervision for them, what is the kind of review of work that we would be performing, or of the work that they have performed as a component auditor, whether the how significant those components are to us, the competence and capabilities of those auditors, the significant matters, like you said, if there are any significant matters that are arising at that component level, all of those will have to be consolidated in our communication to those charged with governance, despite of the fact that it is actually pertaining to the standalone audit of that company also. Because we are the group auditor, we will have to kind of evaluate which are those matters, or how this is relevant for our audit at a consolidated level, and kind of communicate it to those charged with governance at group level. So I
And if
thought
for
this,
yeah.
yeah,
Uh, so, and if, for example, we are auditors of a listed entity which has got subsidiaries, please do remember that when this communication of involving others in audit work is made to those charged with governance, another important element which is required to be covered by the communication is how we as auditors are complying with the requirements of the SEBI guidelines for audit of consolidated financial statements. If you would recall, there are specific guidelines issued by SEBI which says that what is the threshold of coverage which a parent auditor has to cover, both in terms of assets and profitability, etc. So therefore, to that extent, that element also has to be captured. So I'm just using this as an illustration, but effectively, wherever there are regulatory requirements which apply to certain situations, those also have to be weaved into our communication with those charged with governance, so that they are able to appreciate and understand how those have been factored in when we made those assessments, decisions around planning, etc., for you to consider. For example, when we say materiality, that also has to factor in how management views materiality, how regulator views materiality before we kind of conclude on the materiality, which is to be determined by the auditor or we as auditors. And Hina, when you say plan to use the work of the internal audit function,
yeah,
do we typically use the work of internal auditor
yeah,
directly in our procedures? Do we place
exactly.
any reliance?
Exactly. I was just about to say that, Ajit. Thanks for picking it up. Actually, it's not very common that you use the work of the internal auditors in the work that you would be performing as a statutory auditor. But let's say if you plan to do something on those lines, there are a lot of other requirements that you as an auditor would have to do separately, as the procedures to comply with the normal auditing standards. But other than that, for the purpose of communication with TCWG, you will actually describe the nature and the extent of the use of this internal auditor's work, and how they would be how they would give you direct assistance in your audit is something that will have to be called out categorically while communicating with those charged with governance. So typically, this is not the approach that you would be doing in your audit. But let's say in some small firms, this approach has been taken, then it will have to be called out categorically.
And also the point on even where we as auditors do not place reliance on the work of internal auditor, nevertheless uh, we have responsibilities to evaluate the work performed, assess the observations which
Absolutely.
have been raised by
Observation.
internal
Yeah.
auditors, etc. We that also has to kind of been called out as part of the audit plan or communication with those charged with governance as part of these items. Yeah.
Correct.
Uh, what do you mean, Hina, by nature of specialized skill of knowledge needed?
So let's say, like I was mentioning in the earlier example, where we were going to evaluate the impairment of asset. Okay, let's say over there we are going to use any expert for valuation purposes, which maybe management has actually hired, or you have complex derivatives, and in that situation you kind of require the skills of specialized people who have such knowledge. Then in that situation you actually call out that you, at your planning stage, that auditor would be using the work of taking the help from these specialized people, and how they would actually evaluate the competence of these people who have been involved, and also evaluate the results whether they are commensurate with the requirements of the audit conclusion. So it cannot be only relied, you will have to perform work around these the responses that you would have received. Let's say there are certain assumptions which the specialist would be using for his purposes. You would have to work around those assumptions, and hence it is important that the auditor actually calls out all of these in his communication to those charged with governance.
So, Ina, before we move on to the next point, there's a question on the Q&A where someone wants to know that in case of materiality, what has to be communicated? Is it only the quantum or the basis like percentage of revenue or PAT? What is the exact requirement to be communicated? Could you
Right.
explain that?
Sure. So, actually, quantum is not a mandatory requirement as per the standard. So, it is not necessary that you call out that my materiality amount is XYZ. Okay. Uh, However, what is expected, as I said earlier, you should be calling out what was the benchmark that you would have used. Let's say, for example, PBT co is something that you would have used in the question that you have asked. You've written revenue. That could also be one of the scenarios. You can call out that. You need to call out that you have taken this from the financial statement as a whole, considering the impact of or the evaluation of considering for the impact of misstatements and the influence that it would have on the decisions of the users of the financial statement. So percentage, the amount is not necessary. What you would have considered could be considered as the requirement for this
Yeah.
essay.
And typically, for example, one should also apply a lens of what is relevant for those charged with governance. For example, if your benchmark for materiality, which was used, let's say previous year you used profit before tax, and in the current year you've changed it to revenue, then it may also be useful information for TCWG to understand the change, the fact that it has changed, and also the rationale for why the auditor has changed the basis of materiality, because it's an important element to get their buy-in and inputs also on the materiality being used, and therefore to that extent, it should be kind of communicated to those charged with governance as well. So, I hope we've clarified you're now clear on your question. But in case you do have any follow-on question, please use the Q&A or the chat to raise the follow-on question. The last point which is left on this slide is the preliminary views on key audit matters. Could you kind of elaborate on that as well?
Yeah. So, Ajit, like I was mentioning during the assessment of significant risk, okay, uh, typically any such matter which would require special audit considerations would be those matters that would be evaluated for being key audit matters. Now, while performing the risk assessment procedures, because we are at at this point in time at a planning phase, while performing the risk assessment procedures where the auditor believes that there are certain matters which would be key audit matters requiring special audit considerations, he would typically communicate those matters to those charged with governance and actually confirm it with them during their closing meeting. So, something that has been considered as a key audit matter during the planning phase may be not necessarily carried forward as a key audit matter during, while he actually closes his audit and reports or gives the audit report. So before that, when the closing meeting has been held with the those charged with governance, this matter has to be reconfirmed to say whether they still believe, basis the work that they have performed, this particular matter would be a key audit matter.
Yeah. Yeah. And just so, like I had called out, this slide summarizes almost many of the requirements which are required to be covered with those charged with governance as part of your planning phase as auditors. Each auditor, whether both he or she would need to kind of cover some of these items, and not only at the planning phase, because you have communicated this at the planning phase, if there are any changes while you progress through the audit. Let's take some examples. Say you reassess materiality because your benchmark underwent a change, or for example, your preliminary views of key audit matters underwent a change, and now you've included additional matters as key audit matters. Any change from the audit plan, which is either incremental or reducing from what you had communicated, that again has to be communicated with those charged with governance at those respective points in time whenever those changes are made, not later than the final communication with those charged with governance before conclusion of the audit, because it's the auditor's responsibility that whenever whatever items were communicated at the planning stage, if those change, then he or she is required to communicate those changes as well. So it's an important area for us to focus on as auditors in terms of what are the key elements, plan, scope, and timing of the audit, and what are the changes to those plan, scope, and timing in terms of audit procedures, etc.
Perfect.
Yeah. Should we
So we
move
move
on?
on. Yes, yes. So um, uh, the third pointer under matters to be communicated to those charged with governance, we have significant findings from audit. So just the way the scope was one of the most important aspect, Ajit, I would like to emphasize the other item which is very important is for communication is the significant findings. Now, this would cover typically the qualitative aspects of the entity's accounting practices, including accounting policies, estimates, and disclosures. Now, when I say estimates, what I'm trying to say is that estimates, which is something like a subjective aspect. So it is expected that the auditor would evaluate whether the management's judgment as per him is appropriate or not. So he would probably want to call out let's say for example deferred tax or deferred tax asset or deferred tax liability, something like gratuity provision. He would like to call it out whether the estimates that the management has made, whether they are in the radar of being cautious, of being neutral, of being optimistic. So it's more for the those charged with governance to understand whether the estimates that management has made in their books of accounts, what is the view of the auditor on the subjectivity that has been involved. So that's something which is getting highlighted over here under significant findings. The other thing that is expected to be communicated is more on, if the auditors have encountered any difficulties. Let's say there are significant delays by the management in providing the information. There are unavailability of entity personnel. The management is not willing to provide information which is necessary for the auditor to perform audit procedures, while this may also sometimes call out for scope limitations, okay, which has to be evaluated separately. And there are further implications on this under audit report. But primarily, if this is a matter which gets communicated to through those charged with governance and can be resolved at that point in time, then that has to be done timely. Sometimes there are unavailability of information also. So that also is something that the auditor is expected to communicate to those charged with governance. Uh, Other than that, Ajit, the other most important aspect is request of written representation. So written representation would have many matters with respect to acknowledgements actually from those charged with governance. They would involve matters like designing, implementation, and maintenance of internal control to prevent and detect fraud. Something that the TCWG would take responsibility, that whatever they are aware with respect to any fraud or suspected fraud which would affect the auditor's response, and it could involve management or any other employees, or any other thing that would have a material effect on financial statement, whether they have actually disclosed that to the auditor, whether they have disclosed any other allegations that are there, any other regulatory matters that are there. They have actually communicated that to the auditor. That is something that the auditor is mandatorily required to take as a written representation from TCWG. So these are the pointers that are actually required to be called out in the communication. The other thing that I wanted to call out over here are the circumstances that affect the form and content of the auditor's report, if any. So typically, this would include things like modifications. So the auditor's finding. Now, when I say finding, I'm actually moving towards completion stage. So here I'm trying to say if there are any modifications that are being expected by the auditor basis the work that he has performed, and this could include emphasis of matter, other matter paragraph, or misstatements in other information. Then in those situations the auditor is expected to communicate that to those charged with governance.
Right.
Any summary of he's expected to make a summary of all these kind of modifications. Uncorrected misstatements, okay, uncorrected misstatement is one of the most important things that is supposed to be communicated to those charged with governance. And this is critical because um, there is a possibility that after this discussion, there could be chances of this getting corrected. In fact, we have also seen situations where corrected misstatements are communicated to those charged with governance, while that is not a mandatory item, but to the judgment or the professional judgment of the auditor, even corrected misstatements are actually communicated to those charged with governance, because the auditor may think it to be critical that they should know what kind of adjustments are being made
Right.
basis the work performed by the auditor.
Right.
And I would be covering one case study on this, but at this point in time, I also wanted to call out that any significant control deficiencies uh, that the auditor has actually seen requires to be communicated to those charged with governance.
Right.
So these
And
were certain points that I wanted to highlight, Ajit, and you may
yeah.
add further to this.
Yeah, and some of these items link up to the requirements of other auditing standards also. For
Absolutely.
example, the written representation is always expected to be signed by a person who is a member of those charged with governance. One of the common areas of QRB representation, QRB reports and other reports also has been that, say, the representation letter is typically signed by the chief financial officer, who is not considered to be part of TCWG, and therefore the signature of either a director who's part of the TCWG or whoever is part of the TCWG is ideally required to be obtained. This is just an extension of the point you made, that whatever representation we require of the TCWG, that has to be specifically communicated to them so that they are aware. We obtain their inputs as part of our discussion with TCWG, so that and then one of their representatives signs off. And there could be many ways of doing it. Typically, in a first year audit, it is ideal that the representation letter is also circulated to all of the members of TCWG. Subsequently, then you could kind of say that these are the incremental points. But it's important that that communication happens so that there is adequate understanding of what are the areas of representation, written representation, which we are seeking as auditors from TCWG. Similarly, significant matters will not only be relating to those who are which have resulted in issues or disagreements, but it could also be significant matters which are impacting the financial statements, but there is no disagreement. But nevertheless, it's a significant matter for communication, right? And of course, the key areas of judgments and estimates. What are the one-off events which have occurred? Those are also items which we would typically expect TCWG to be aware of. Right? For example, we had audit trail as a new matter of reporting in FY24. Now, if we are dealing with an FY24 audit for an unlisted company, we would expect the audit trail reporting to be covered as part of our communication to TCWG, even if there is no exception noted, because still, nevertheless, it's an important item to communicate to TCWG, even at a audit plan stage, certainly, and also from a findings of audit perspective. So from both standpoints, it is an important element to cover. So again, the key point is that when we are communicating significant findings from the audit, we must keep in mind what all we had communicated as part of audit plan, what are the new items which are required to report on, is there any other one-off significant matter which has been dealt with but appropriately, but still you feel it's significant enough for TCWG to be aware of. One has to kind of have a overall perspective before we make this communication, because this is one of the most important communications at the end of the audit. Nina, what else do we have on communicating to TCWG? Do we have any other
Yeah.
item?
Yes. So this is the last one under communication, while we will also have certain other matters which we would kind of correlate from the other standards. But Ajit, this is another important aspect, which is independence. Like, so independence requirement for listed entities are quite stringent in that sense. It says that you need to have a statement that the engagement team and others in the firm or network firm, so I mean to say it's like firm as well as your network firm as applicable, have complied with the relevant ethical requirements regarding independence. All the relationships and the other matters that may reasonably be thought to bear on independence. This is typically on any non-audit kind of services that would have been provided by the firm or the network firm, that will have to be communicated so as to evaluate if there are any um, threats that could be there to independence. And most importantly, what are the safeguards in order to reduce or eliminate these threats to independence so that they are at an acceptable level. So, uh, Ajit, when we say independence communication, this has to be in writing. That's utmost important. Secondly, when I said firm, network firm, I also wanted to cover the aspect of component auditor, because even he, in this situation, would be implied to be independent of the entire audit. So please extend this arm to the component auditors as well. And lastly, if you foresee that there are certain non-audit services that could be a threat, which in a way, our quality standards do not allow, then kindly evaluate whether they need to be reduced to an acceptable level, or to an acceptable level, in order to further go ahead with the audit of these particular entities.
And
Ajit, would you
Hina,
like to
while
add? Yeah.
while we have mentioned listed entities in this slide, but could there be scenarios even for unlisted entities where this communication of independence is relevant? Say I am auditing a unlisted bank. There could
Right.
be elements of independence which may be relevant. For example, do I have a loan as a signing partner? Do I have any other form of financial relationship? So, does this communication apply only to listed entities or does it apply also to unlisted entities?
So independence requirements typically would apply to unlisted, but when the standard 260 actually calls out for a written communication, and that is actually applicable only for a listed entity. So while we say uh, independence is required, the written communication for independence is actually required for listed entities only.
When you say required, you mean typically these auditing standards call out the minimum
Yes,
expectations.
the minimum
It does not
expectation.
prevent an auditor from
Absolutely.
voluntarily communicating their independence, even in context of unlisted entities. I just thought I'll call out this point for everyone's benefit that while these requirements are mandatorily applicable for listed entities, it is also good practice for us to communicate these our independence or basis of independence to the TCWG for unlisted entities also, because it's still a relevant item for them to be aware of, and it could be a valid question in their minds that are we as auditors, and when I say we, I cover the entire team, are we independent of that unlisted entity? So therefore, that is also an important element to cover. So just to recap, we've covered three or four items so far. One is the auditor's role in relation to the financial statement audit. That was one element where we also called out that preparation of financial statements is not the responsibility of auditors. It is also the responsibility, or actually the responsibility of the management and TCWG. We then spoke of what is required to be covered as part of scope and timing of procedures, typically covered as part of audit plan, typically expected to be communicated at the planning stage of the audit once risk assessment is completed. We then spoke of what is required to be communicated in context of findings arising from audit, what are the minimum items which are expected to be covered by auditors, and then finally the communication in relation to independence also is an important area which we as auditors have to be aware of. Uh, Hina, anything else which you would like to cover in this section?
No, Ajit, I think you've actually covered and summarized it.
Yeah.
So we'll move on to the next.
Maybe we'll just take a pause here, Hina,
Yeah,
just for
if there are
anyone, if
any questions, sure.
any questions, any point you would like to make based on your experience, any experience you would like to share, we would be more than happy to hear from you. We'll just wait for 5-10 seconds
Sure.
before we move on. Either a raised hand or the chat or Q&A. Feel free to use any of the options. Okay, I don't see any questions, raised hands. Maybe Hina, we can move on to the next slide.
Yeah, sure.
Oh, there is a Mitesh has raised his hand.
Okay.
Um, could we unmute Mitesh, please? Or Mitesh, could you type out your question on the chat? Yeah, Mitesh, I think central the administrator ideally should unmute. Yeah, if you can write in the Q&A, we'll just wait for your question before we proceed. We'll just wait for his question to come through.
Yeah, sure.
What is the next topic we want to cover, Hina, while he types his question?
So, Ajit, now we would be covering or probably linking the summary of requirements from other standards on auditing. It would be similar to the matters that are required to be communicated, but requirements from other standards.
I think Hitesh has typed this question.
Yeah.
Practically, how is TCWG made aware? Apart from directors and management, can we ask for specific team designated as TCWG? I think Mitesh, this we briefly covered at the beginning. We will also cover in the subsequent slides that who are members of TCWG uh, should also be kind of assessed by management. We should also assess and agree on that assessment that this body or these are the set of individuals who are considered to be part of TCWG. Now, communication typically happens in multiple manner. One could be written communication. For example, the representation letter, which is provided by TCWG, signed off on behalf of them by one of the TCWG, is an example of written communication. You also may have oral communication, which is documented through minutes of meeting. For example, many of the communications which we have around audit plan, which we have around communications of findings. We may typically have a PowerPoint presentation or a document which we share with the TCWG, but it is important that it is backed up by evidence of the discussion, which we'll cover subsequently. So there will be many ways uh, there there'll be many ways in terms of how you could communicate. Like you have also asked that if it's through PPT and we ask for management comments, whether that also has to be considered with observations. Either we circulate the PowerPoint presentation in advance, get their written feedback and capture that, or if it's discussed in the final audit committee before the accounts are adopted, then detailed minutes have to be captured, preferably by management as part of the minutes of meeting and at a minimum, that has to be discussed. What was their response? What was the feedback? Because quite often the PowerPoint presentation are very succinct bullet points, which are aimed to cover key messages. But the explanations which we provide along with those for those each of those bullets and the response which we get discussion which we have for each of the points is often an important element of evidence on what was communicated with TCWG. As you would see in the subsequent slides also that a lot of the regulatory reviews, inspections also focus on evidence for communication with TCWG and only the PowerPoint presentation at the end may not suffice as appropriate evidence for discussion with ECWG. So it's a very important element of. So it's good that you've raised this question because it's a very important element of regulatory focus as well. I hope we've clarified your question, Mitesh. If you have any further questions, please do use the chat or the Q&A to raise your follow-on question.
I just wanted to add one point over here,
Yeah.
Ajit. ICAI has actually released certain audit work paper templates. Okay.
Right.
And one of the documents is actually a letter that has to be communicated to those charged with governance. So it actually covers a lot of pointers through that letter, which can be you can use that as a template and put in all the matters over there. But it is a letter that has been addressed from the auditor to those charged with governance, and that can be used as one of the documentation points, like Ajit mentioned, the minutes of meeting. Something similar to that, it could be used as a documentation point to be documented in your file. So the slides actually has a link to those resources, which once circulated can be used by everybody to go through the sites.
Okay. Should we move on to the next slide?
Absolutely. Yes, Videsh, we would definitely share the same. Okay, so let's go to the next slide, Ajit. Like I mentioned, Ajit, this is an extension to the matters of the matters to be communicated to those charged with governance. But these are summary from other standards. So the first one is basically on SA 230, the most important one. Sorry, 1 second.
Yeah. So while Hina just recovers, one of the most important elements around documentation or discussion of significant matters with management, TCWG, and others, including the nature of significant matters discussed and when and with whom. So quite often, like I was just explaining in the previous slide also, we do have an elaborate slide deck which typically everyone prepares at the further communication to those charged with governance of significant matters, but the detailed discussion is missing. And if you look at the minutes which is prepared by the management also, it typically would say auditors, statutory auditors made the presentation relating to the statutory audit to the audit committee or board of directors as the case may be, with no further details. Now when it's happened quite often now when ICAI as part of various reviews which it conducts, or NFRA as part of various reviews which it conducts, looks at the file, they are unable to determine what was the communication. They can understand the headline, what was the topic discussed, but what was the actual communication made? Was the communication that auditor agreed with the position, disagreed with the position? What was the view of those charged with governance? What was the feedback provided? How was the matter resolved? Quite often those items are not on the file, it's not documented. And the most important element of the documentation is the minutes of the meeting, right? If you can imagine, for us as auditors, the communication with those charged with governance, the findings of the audit is the culmination of the audit, right? And if everything rests on that and we don't have anything in our file to support what was the discussion, then quite often it becomes a problematic matter from a supporting audit evidence standpoint. So therefore, documenting the discussions of with those charged with governance, whatever is the documentation, be it audit plan, be it communicating significant matters, whatever be that matter, it has to be evidenced either in the form of minutes. Ideally, it should we should come engage with management and tell them that their minutes of meeting should capture our discussion. If not, we should prepare the minutes, share with the company secretary, and say that these are the details which we covered in the meeting and get their confirmation so that at least that's evidenced on the file that the minutes of our discussion is captured properly. Right? Hina, would you like to cover what you mean by SA 450 and what requirements you are referring there?
Sure. So, Ajit, we actually touched upon this in the earlier slides. This is basically on the misstatements. So, as I mentioned earlier, you communicate or you are mandatorily required to communicate the uncorrected misstatements, the effect of these uncorrected misstatements individually or in aggregate that may have on your opinion, on your audit opinion. And like we all know, the ideal requirement would be your request to them to correct these misstatements. So hence this communication is very important, and it has been highlighted as under SA 450 to cover what would be the impact of these misstatements on the various areas of audit, and finally an aggregate amount, so that you actually compare it with your materiality levels to see whether that would be at an acceptable level or not. Like I mentioned earlier, uh, corrected misstatements is optional in nature. However, you are also required to communicate the effect of uncorrected misstatements related to prior period, if any. So that's also one of the mandatory requirements under standards of SA 450. The next one, Ajit, is with respect to uh, stand, standards on auditing 550, which is with respect to related parties. So what is what is important over here is to actually communicate any significant matter that has arisen during the audit in connection with entities related party. Let's say, for example, non-disclosure of related party or a significant related party transaction. Then there could be situations where a significant related party transaction which appears to the auditor to have a lack of business purpose. So there are certain situations where auditor feels that a particular transaction is not really making a business sense, and hence he would like to communicate that to those charged with governance. But most important is this standard calls out that the auditor should at a minimum, review the minutes of meeting with those charged with governance while he actually reviews the minutes of meeting uh, of the shareholders, board of directors, etc. It is also required to review the minutes of meeting which would involve those charged with governance and see if there are any such related parties with whom there are transactions but have not been really identified by the management and reported to the auditor. So these are all actually linked. You evaluate these minutes to identify the transaction while you are doing your audit. If you have identified any such parties with whom the management has actually had transactions but they have not really called it out, and finally if there are transactions and you believe that it does not have a business purpose, then you communicate this all uh, as per the requirements of SA 550. The next one, Ajit, is with respect to standard ongoing concern. Now, this is again a very important one, and we have seen many companies actually have to make this communication or evaluate this. Now, what typically would be the auditor's approach? He would be he would be required to communicate event or condition identified that may cast significant doubt on the entity's ability to continue as a going concern. Now, typically, the auditor's approach would be to evaluate whether the period under which the management assessment is appropriate. So he actually calls this out in his communication, all these pointers to say how he has done his evaluation or what is the approach that he has adopted to see whether there are any such conditions present or not. So, one, as I said, he would evaluate whether the period of management's assessment is appropriate and whether it includes all the information that is required to be uh, included as per the audit period. Then he would say whether there are any such conditions that he feels could have a doubt on the existence of a going concern. Evaluate the process and the models which the management has actually used for their assessment purposes, including if they have actually called out or used any work of experts. Then then it is expected that he communicates the assessment of reasonableness of management's budgets, forecasts, and whether these are within the range that are expected by the auditor. Finally, he is expected to communicate the conclusions reached and whether the management's plan for future actions looks to them appropriate. So these are all the matters that the auditor would include as per SA 570 as a communication to those charged with governance.
Right. And I just like to call out while on going concern, Hina did talk about what auditors have to communicate. But please do remember that one area where regulators have focused and the auditing standard also does specifically require the management's assessment of going concern, right? And that has to therefore go through a thorough review by those charged with governance as well. It cannot be that management's assessment of going concern is not reviewed by those charged with governance. There must be evidence which is available with you that those charged with governance have reviewed and they agree with the assumptions, assessment, etc. Uh, made for those charged with governance. So it's a very important element which, while it is not an area where you need to require, where auditors need to communicate to those charged with governance. Nevertheless, it's one of the important responsibilities of those charged with governance, which we must ensure as auditors. And these are just illustrations of items which are required to be communicated based on other standards, you may find that there are elements of each standard where there is a communication or element of communication with those charged with governance. One must be very carefully kind of look through each standard and evaluate what is required to be communicated to those charged with governance. We've only covered some of the key ones
Yeah.
which are relevant from a communication standpoint.
Absolutely. And this holistic view of which are all these standards, I would just like to emphasize that there is, again, like the way I mentioned about the templates on audit documentation, there is standards on auditing checklist, okay, which covers all the auditing standards, and all these kind of aspects have been covered in this checklist. So one must definitely go through this checklist and uh, fill in this checklist so that he or she does not really miss out on any of the matters, irrespective of the standard. So whether it is on those charged with governance or any other pointer, this checklist actually covers all such kind of requirements under the auditing standard. So we'll be sharing the link to that also via the resources slide, but just wanted to highlight at this point in time. Okay,
Should
so
we move on?
yeah, we move on to the next one, Ajit, and this is the requirement under SA 240 and SA 250, which are the most um, referred or observed point by all the regulators. It has been observed in various reports from QRB observations or NAFRA observations that the inquiries that the auditor like basis the inquiries that the auditors have made, um, they have not really appropriately evaluated whether the management has communicated the processes for identifying and responding to risk of fraud in the entity. There are observations with respect to non-communication of frauds or identified frauds to those charged with governance. So very critical that this aspect be looked by everybody as an auditor, because it's very important that you understand how TCWG exercises your oversight of management's process for identifying and responding to the risk of fraud, and the internal control that the management has established to mitigate these risks. You make inquiries with TCWG to determine whether they have the knowledge of any actual or suspected or alleged frauds affecting the entity. Most importantly, you communicate the identified or suspected fraud to those charged with governance. There are exceptions involved, but I would not really call them out because that's a situation where all the TCWGs are actually involved in managing the entities. Those are the kind of exceptions. But nonetheless, these communications are very important. And when we talk about SA 250, you communicate the matters involving non-compliances with laws and regulations that come to the auditor's attention during the course of audit. So these were the matters under SA 240, Ajit, that we thought should be communicated. And lastly, on SA 701, which we have already discussed, which are matters with respect to key audit matters or auditors' determination that there are no key audit matters, even that has to be communicated to those charged with governance, that why do they believe that there are no key audit matters in case that's the case. So when I say that there are no key audit matters, of course, to the ones whom it is mandatorily applicable. So these are the communications that are required to be made under SA 701.
Yeah. Anyone
Any
has any?
questions?
There's a
Yeah.
Q&A I see pop up. Just
Okay.
1 minute. Okay, I think that's a separate thing. Is there any other question which anyone else has relating to these items which we've covered now? You can raise your hand, use the chat pod, um, use the Q&A feature to ask your questions. Okay. I don't think there is any other question. We can move on to the next topic then.
Yeah. Effective two-way communication, Ajit.
Yeah.
Would you like to cover
Yeah.
this aspect in
So
detail?
we've spoken of this before that when we say communication with those charged with governance, it is expected to be effective two-way communication. This is also, uh, just give me a minute. I- It is also effectively a area of focus from a regulator perspective. We see this being picked up in a lot of regulatory inspections as well, where the regulator has called out that we see evidence of you communicating what you communicated or intended to communicate as auditors to TCWG, but we don't see evidence of two-way communication. This goes back to our point on evidence of discussion, what was discussed, etc. But also there are many elements to this. Right, if we've tried to capture some of those in this slide. So if you see appropriateness and timeliness of actions taken by TCWG in response to matters raised by the auditor. What do we mean by this? Quite often, we see audit committee presentations being made on the day of the adoption of accounts or one day before the adoption of accounts. And there are many complex matters which we come across as part of audits, which we communicate to TCWG. The question which is fair, which regulators ask us, is how do we even know that the auditor TCWG has had the opportunity to consider this and take any actions arising from your discussion? So therefore, the expectation is that there is a timely periodic conversation with TCWG. If there are significant matters, even if you have met them on a quarterly basis, if there are significant matters which need their attention, say even if you're presented in something in January, then and there's a matter which you came across in February, it's not enough that you give presented on 15th May, one day before the adoption of accounts. There has to be timely communication which enables and demonstrates that ECWG have had the time and have taken appropriate action from their perspective. Willingness and capacity of TCWG to meet with auditor without management present. So again, this may happen today as part of your audits, but is there evidence on your file which indicates that the TCWG has met you as auditors without management being present? The ability of TCWG to comprehend matters raised by auditor, extend pro TCWG probe issues, questions, recommendations made to them. Again, this can only be evidenced through minutes of meeting on your file. Um, Openness of communication. We've spoken of two-way communication between the auditor and TCWG, meeting the applicable legal and regulatory requirements. Apparent awareness of how matters discussed with auditors affect their broader governance as well as their management responsibility. So all of these are important elements which go into a effective two-way communication and is therefore important and relevant for us to consider. Right. Hina, would you like to move to the next slide?
Yes, Ajit. Right. So I think, Ajit, this covers key observations from recent quality review board. Would you like to take it up, Ajit?
Yeah, so we've been speaking about regulatory reviews as well. And maybe let's go point by point and we can link it up to many of the points we've covered. Um, First point, which we would like to call out, not documenting performance of necessary audit procedures, including making inquiries of management and others or those charged with governance. There are many areas where we are supposed to conduct or perform inquiries of management DCWG, and we may very well be doing that as part of our audit procedures, but really detailed minutes of those discussions. What were the questions we asked? What were the responses they provided? Quite often, these responses include certain elements which may be, which also need to be captured, whether that's captured or not. See, the focus is on not documenting. performance. And a general thought process of regulators as well, which is appropriate, is if something is not documented, is considered as not done. There is no consideration that even though it's not documented, we will give you the leeway of consider you've done it, right? Similarly, not making inquiries of internal auditor and those charged with governance to determine whether they have knowledge of any actual suspected or alleged fraud affecting the entity. Again, an area of inquiries. Not obtaining representation from management or those charged with governance for matters stated in para 39, and that they have disclosed to auditors the results of its assessment of risk that the financial statement be materially misstated. These are requirements of the auditing standard itself, and therefore we need to obtain written representation, and that was not obtained in the cases which QRB reviewed. Not documenting discussions of significant matters with management or those charged with governance. I've already spoken of this. This is a very important area, probably the most important area, because whatever we communicate with those charged with governance without supporting documentation, and when I say documentation, I do not mean the PPT presentation, I mean the minutes of meeting capturing what was discussed, what was the feedback, what was the response, all of that. We need to kind of cover all of that as part of our documentation. Communicating with those charged with governance on who was appropriate person to be communicated, which we spoke right at the beginning. Documenting communication of matters of concerns to TCWG. Not communication, documenting matters orally communicated to TCWG. These are common issues not only in QRB reports. We called out QRB reports, but if you look at some of the NFRA inspection reports as well, these are areas of focus. And remember, one important thing, communicating to TCWG will not absolve auditors of their responsibilities of doing the right thing in relation to the audit. If we believe something is incorrectly done, then communicating to TCWG is not going to solve for that. It still requires us to consider whether it is material enough for us to consider modification of the audit report, whether we need to have an emphasis of matter, qualification, disclaimer. All of that is independent of whether we communicate it to TCWG. So while communicating to TCWG is an important element of our audit, it does not absolve us of our responsibilities to consider the impact of any errors or inappropriate accounting treatments or lack of evidence on the audit report itself. I would just like to clarify, because quite often that's also an area where there's some ambiguity, because ultimately the financial statements are the TCWG's responsibility. Audit report is our responsibility as auditors. So the fact that we've communicated to TCWG means nothing from our own audit report perspective. If we can move to the next slide, Hina.
Yeah. So we thought we'll just do a test check of the discussions that we have held through some case studies. So I'll just present the facts. It was observed that the audit team communicated certain significant findings to TCWG orally. Now, there was no documentation of this verbal communication, considering SA 260 allows auditor to communicate orally to TCWG. What do you all think? Is this form or mode of communication with those charged with governance adequate for compliance with SA 260? First of all, is oral communication okay, not okay? If it is okay, whether this verbal communication is all that was required to be done. So uh, we wait for few seconds to get responses from everybody. What are your views on this?
If you can use the chat, or ideally use the chat to
Chat
provide
box.
your response.
Has anybody written in Q&A? No. Okay, so
Yeah,
some
there is
answers
one.
are coming from Q&A also. All right.
Others, we have one response so far. Many more of you on the discussion. So if you can please provide your responses. We'll just wait for 30 seconds. You can use the chat pod to say yes or no.
Okay, I think we've got one more answer in the Q&A box, Ajit.
Yeah, another no. Others, please, if we can have some responses. We'll just feel that all of you are there. Okay,
Okay, I think
I
we should.
guess, Hina, we can move on.
Yeah, let's go on. So, the responses that you have provided is absolutely correct. This is not adequate. So while the standard calls out to say that auditors need to exercise their professional judgment to determine whether communication could be in writing or an oral communication is adequate, a proper documentation or an adequate documentation should have been maintained in the audit file to demonstrate the communication was in compliance with SA 260. So, point one, yes, oral communications are allowed. But point two is that you are required to document with whom was this communication made, what was the communication made, and how you have actually closed this matter. This entire thing is required to be actually documented in your audit file. And this is what para 19 and para 23 actually calls out under SA 260. So we move on to the next question, Ajit.
Yeah.
Sorry. So the question is, a significant deficiency in internal control led to qualification of IFC, and this was communicated to TCWG in a meeting held prior to the board meeting. So there was a significant deficiency, but it was communicated in a meeting that was held prior to the board meeting. So the question is whether the timing for communication uh, is appropriate as per SA 260. So some responses, please.
Nothing on the chat, Hina. Maybe we'll just allow everyone to 30 seconds to respond.
Okay, I think I will cover this, Ajit. There are no okay, 1 minute. There's one response in Q&A, I guess. Not appropriate. Yeah. So you're absolutely right. This is not appropriate. Uh, and the reason being, see, the regulators have actually called this out in one of the QRB reports as well as NAFRA reports, that the auditor has on a, what you say, just like a formality, he has done this communication, and it is done just in a meeting which was held prior to your board meeting. So let's say the meeting was at 11 o'clock. The board meeting was at 11 o'clock. This communication was done at 10 o'clock. Now just imagine the kind of time gap that you are having between the two meetings that are held with the board and with TCWG. So this was really called out to say that the timing is not appropriate. What is expected of the auditor is that he at least orally communicates to TCWG as soon as it is practicable that there was a significant deficiency in internal control that was identified. There needs to be a two-way communication on this matter so that the TCWG, if required, could take necessary actions, and this could be resolved if possible. And finally, the documentation to this effect should be taken forward. So this is again described in para 21 and para 9 of para 21 of SA 260 and para 9 of SA 265 on timing and matters that were required to be communicated. So very important point, when you are communicating is also being reviewed by the external reviewers, and that needs to be taken care of.
Yeah. Should we move on, Hina, to the
Yeah.
next slide?
Yes. So let's go on to the next slide. And I think this is the expectation from audit committees that are being recently observed. Ajit, maybe if you would like to take us through this.
So these are just general expectations. Obviously, the bulk of the conversation, what we focused on is what are expectation from auditors. But we may have expectations from TCWGs also. So please read audit committees as those charged with governance. In this conversation, we presume that the audit committee is those charged with governance, but effectively this has also been a focus area by NFRA as part of their public conversations and speeches, which they have been making in public domain, that audit panel of companies also are equally responsible for the financial statements and any audit failures, etc. Therefore, some of the things which they've spoken of is that audit those charged with governance have to understand the business, active involvement in areas critical from the perspective of entity level controls, focus on areas of judgments and estimates, including competence of external subject matter experts, deep dive sessions for significant matters, around focus on a topic such as non-audit services, conflict of interest, system of audit quality, and tone at the top in the audit firms, audit documentation, related party transaction. These are also areas which the auditors would need to kind of be aware of. So therefore, to that, sorry, those charged with governance, we need to be focusing on from their perspective. So while the thrust of our conversation was what we as auditors should do, but there's a certain amount of engagement which we need to do, and we can use these QRB reports and NFRA reports to explain to those charged with governance of our respective audit clients on what is the expectation from those charged with governance, because their role will also be equally critical in us meeting our obligations. So I think that's what we wanted to end with. I think we've come to an end with the slides as well, right, Hina?
Right.
Maybe we can pause for a minute for any questions or any comments or observations which you may want to make. Hina, maybe you can pause sharing your screen and we can just wait for any Q&A.
Nothing as of now.
Yeah. Maybe a question for the producer then. Should we stop the call, or is there anything else we would like to cover? The host.
Hello.
Yeah.
Yes, sir.
Is there anything else which you would like to cover? We are done with the presentation. There are no further questions from the participants also.
No, sir.
Okay,
So,
thank you then. Yeah,
yeah.
Hina.
So Ajit, just that the slides, once it will be circulated, would have like you can see on the screen, would have resources and links to those resources. So we would like everybody to actually kind of go through these resources, and that would be helpful for them. And please let us know if you want to cover anything right now, or else we can call it off.
Yeah. I don't see any other questions, Hina. Maybe we can
Yeah.
drop off.
Okay.
Okay, thank you everyone for your time. Hopefully you found the session to be useful. Thank you, Hina.
Thank you. Thanks, Ajit. Thank you, everyone.
Bye.
Thank you, ma'am.
Thank you.
Thank you. Bye.